MC baby. Oh man, what an evening it's going to be. So Jerome Powell is going to be stepping up to the good old podium, doing a little cough, and then maybe a shrug, sip of the old H2O, and he's going to start decapitating from his mat anyways. So what we're going to be doing is going to be listening to Powell talking about whether or not the Federal Reserve is content with the current story of interest rates, and are we going to get more cuts going into 2025? Ladies and gentlemen, it's absolutely chaotic across the board. Bitcoin right now on that flavoursome pump above the 102,800 zone. And spirits are kind of high. It's going to be good news. But when you think about it, you've got to understand this. Interest rates holding with the prospect of cuts later on. Business is going to be cheaper because money is going to be more accessible. That's what we're waiting for. Listen, man, Trump and Powell, it's going to be good news. I would love it if Trump were to just step up and make an announcement and say, no, we're going to put out an order and get these interest rates cut. How mad would that be? We are living in very excited times, ladies and gentlemen. So how are we going to approach tonight? Well, the FOMC results in itself with the federal funds rate and the actual statement will be released in the next 25 minutes. Once that is done, we'll be then given about half an hour before the actual press conference. In that time, I'm going to be breaking down a little bit of price action. I'm going to go through several assets from Euro to NASDAQ. I'm going to be talking about certain structures that we can focus on because we will experience these structures if Powell does say something the market doesn't like, or even if it does like it. So make sure you stick around for that. If you guys are savvy with your strategies and you want to know what else you could use, maybe the hybrid system could be something for you in a later future. Now, with that being said, I hope everyone is tuned in. No holding allowed. Blink if you are short, Tino. No positions for me, man. We ripped NASDAQ over the last couple of days, so we don't need to do anything anymore. Not until FOMC is done. But I will say that tonight it's going to be flavoursome in Asia. We've got the earnings announcements from Tesla, from Meta, from Microsoft. But I'm going to say something as well. You might not know about it, but it's just come and hit the news that Trump is now going to try and put something out to Nvidia to stop sending certain chips out to China. Trump's making movements, man. And when analysts say that there could be a trade war going off, it genuinely is. That's World War III. Trade war. Economic war. And that's what's happening right now. It's all eyes on the States. Okay? You can see that Trump stopped certain federal funding to go out. He stopped foreign aid. He's out of the World Health Organization. Money is all being retained. Dollar dominance is coming back. That's what Trump's all about. He might like your Bitcoin, but he's all about the dollar. As long as we keep that aligned in our minds, we know what the real plan is. Bitcoin, I think, is just the scapegoat, just to get you guys all excited about Donald Trump. Never mind. Let's get with the program, ladies and gentlemen. If you are new to the channel, welcome to the FOMC Live. My name is Tino. Let's have a conversation, man. Here we go. Let's get with the program. So, Bitcoin, huh? What on earth did XRP... What did I say to you, man? It is down 4 cents from earlier on. What an amazing asset. Bitcoin right now, 102,667. Going over into Ethereum. We got sideways action on 3,113. Going over into other assets across the board. Let's just go and have a look at NASDAQ for a quick second. So NASDAQ is currently taking a little bit of a tumble to the downside, but that of course is because of this story here. Trump officials discussed tighter curbs on Nvidia China sales, so that's really going to be impacting Nvidia's potential earnings into the future. Now, going over into Nvidia, just to put it into perspective, where are we at? There she is. Nvidia right now is down 6%. Now, this volatility in Nvidia somehow is probably going to be putting investors off. I mean, you're up 6%, you're down 17%, and then you're up 8%. That's crazy volatility for a stock. It's starting to behave like Bitcoin. Speaking of which, what's MicroStrategy doing right now? Let's just get into the program. Here we go. $335 a share. Yep, they still keep on buying the Bitcoin. Quickly going over to the Arkham to understand where we are with regards to the ETF. Not really seeing any... Something's wrong with this, man. But not seeing any changes to the ETF. But as long as BlackRock is holding, it's all systems go. Now, going into the calendar, because what we've got going off very shortly. Here we are. So at 7 p.m. UK time, which is in roughly 20 minutes or so, we're going to be receiving the federal funds rate. And when the FOMC statement comes out, we are looking, well, apparently on the street, they're saying that they're not really going to be surprised with anything. They know that the Fed is going to keep the interest rates unchanged. Swap traders have bet 99% sure that the rate is going to be 4.5%. And if, God forbid, if it were to be any different, if it was higher, just at the last minute, ladies and gentlemen, you wouldn't have a black swan. No. It would be an EMP to the marketplace. Everything would just scream downside movement. It would be crazy. The last time that happened was with dollar Swiss. The Swiss actually said, you know what? We're going to change our interest rate decision. They decreased it the last minute, and then everything just slumped against the Swiss dollar. So in other words, dollar just collapsed nearly 400-500 pips at the start of the Sunday session. So yeah, that's not going to be happening with the dollar itself. But then after that FOMC statement, we'll be then going into the press conference. And this is what's important. The press conference is so important for us because we need to know if Powell is going to be dovish or hawkish about future interest rates. Now, moving forward from that, guys, we've had some good news with cryptocurrency. Robinhood is now going to start launching futures. So that's going to be great news for it. China apparently is now allowing ownership of Bitcoin. So that's going to be interesting news to hear, to see the least. And of course, going into Asia tonight, they too are going to be reacting to that because that only came out around 5 hours ago. So it's going to be very interesting to see how the market actually behaves. Now, quickly going over into it all, just going back into Bitcoin, we are at 1.4% up for the day. That's doing very, very well. Chat, where you at? What is good? Canada is starting quantitative easing. Okay, then. We all want financial freedom. Allow ownership and ban mining? Yeah, probably. When Trump becomes the most hated president, even worse than Nixon, can we laugh at you, Tino? More than welcome to laugh at me, my friend, because I'll laugh with you. Any questions moving forward, guys? Let me just have a look at this survey here. Here we go. So I've done this survey, and it says Bitcoin up or down. 60%. Oh, wow, this is mixed. 60% of you, 868 of you. Yeah, 865 of you have voted Bitcoin's going to go up. And 41% of you have said down. Yet there's only 232 likes. That math doesn't make sense to me. And you actually have to go through so much more effort to actually answer that poll than you do with the likes. Get with the likes, ladies and gentlemen. Let's get them up. If we can get 2,000 likes by the end of this stream, I'll be a happy chappy. Yeah? Anyways, let's break it all down. Let's go over to the dollar for a split second to understand what we have got going off. Now, in the next 20 minutes as such, we're going to get the FOMC press, the result of this statement itself. Okay, we're looking for keywords, and there will be algorithms coming out that are going to be suggesting, or not algorithms, but they're going to be looking in for keywords which will move the markets. Okay, during the FOMC live, we're going to be paying attention to this. Now, in front of you is the XO charts, and it's the depth of market. And what we're going to be focusing on is Bitcoin over here. Now, what I want to be paying attention to is the number of orders that are going to be coming into the top side of Bitcoin. If I see lots of orders and they are to the sum of 100 plus, whilst the FOMC is coming into play, then we could make the assumption that Bitcoin is going to attack those orders. Right now, there's 117 contracts, just around the 102.99.2. Okay, so there is interest at the 103,000 region itself. NASDAQ is starting to make a little bit of a move to the upside where we are. A little bit of a small movement right there, but we're not going to be looking at NASDAQ just yet, guys, because I don't want to pay attention to it until FOMC comes out. Quickly going over into order flow. Let's have a look at Bitcoin's order flow, and then we'll just get back into the dollar very shortly. So, as I said earlier on, we've got quite a bit of significant buying that's coming into play. And those of you that are new to the channel, we are focusing on this buying behavior. This here is when buy orders are picked up, so limit buys. And that happens when prices go down. Remember, when prices go down, that's when limit buys are picked up. All right? When prices go up, that's when the limit sell orders are triggered. So when we zoom out of this and say to ourselves, well, what have we been getting more of? What can you see? You can see down below here that the green bars represent the number of long liquidations. And as you can see that this area here saw a lot of liquidations, but we're now starting to see a reduction in those liquidations, which could suggest that maybe there's going to be a turn for a rally to the upside with Bitcoin. because they're slowing down on the long liquidations. Just remember, on Monday, we experienced nearly $1 billion worth of long liquidations wiping the floor. $580 billion worth of capital value was wiped off Nvidia. A lot of long traders had been wiped out on Monday. What a terrible start to the week. But usually what that means is there's like a reset in the book. Because remember, leverage trading is you borrowing money from the exchange. Open interest. So the idea is if all those people that have borrowed money have been liquidated, then that means there's going to be a change in sentiment. So that means everyone thinks prices are going down, which effectively means that the market in principle could reverse to take out those liquidations. You can see the liquidation points right here. You've got high margin traders at around 106, 400, and then you've got that starts at 104. So between 104,000 and 106,000, we know that we have got high margin, low leverage traders. With higher margins comes lots of stop orders. So that's more money for Mr. Market Maker. Are they going to be attacking that? Well, we need to see if that's going to be the case. Zooming into the order flow. You can see Bitcoin is about to try and clear a very interesting point. Up here, we have got a sell order for about 3.6 million. And that price point is roughly at the, yep, there you go, 102,996, which happens to be on the order flow over here. That order right there. Okay, so 124 contracts. And that is actually adding up as we speak. So it was 117, 112. Now it's gone to 124. The idea is that if this order right here remains in the chart, then the logic says that the market is going to go for that. What we need to see is we need to see the bids. Look, the bids are holding out. Look at that. 165 contracts. You've got 1,525 contracts right here at the 102,690. So as long as there's that participant right there trying to hold price, and as long as he keeps on filling the contracts, because you can see it keeps on increasing, decreasing, but it's actually increasing. So every time it decreases, more contracts keep getting added on. Now, this story right here is all about the bid and the offer, okay? And those of you that are really into trading, when you start diving into the bid and the offer, that's when you start really understanding the importance of contracts that are placed on the book and contracts that are removed from the book to tell you if there's commitment from the market or not. Okay, so that's something for, this is what you really want to be paying attention to this range. See how it's now 157, it was a 143, now it's 157. See, now it's going up. We're seeing some offers coming into play. That 123 order up there at 102,992 could be something that we could see Bitcoin going to attack. And on the right here is Nvidia. And Nvidia's got nearly 2,500,000 shares at this price point at 122, with a buy order of around 50, a sell order around 53,000. And then at the top, you've got 66,000 and 93,000 as we keep going higher. So if Nvidia can end up at 124.98, that means NASDAQ is just going to rip to the upside. And that's going to be a nice little recovery for the NASDAQ given today's shenanigans of her going down. Now, quickly going back into it, how long we got? Where we at, ladies and gentlemen? Any questions? Yep, I've heard about that. I need to actually have a look at that gentleman's coin from the super chat earlier on. It was WIF coin. Let me just quickly have a look at that. Did I see WIF? WIF hat. Let's have a look. What did it do today? It's done all right. Nice move up to only come back down, consolidating sideways, pretty much copying what Ethereum's doing, if I'm honest with you. Not so much Ethereum. Let's go to the Sol altcoins. Yeah, they're not really doing anything. Altcoin meme coins ain't really doing too much. There's a lot of hype on this Trump coin, but never mind anyways. One thing you do want to look at is the USDT chart. Now, USDT tells me where psychologically investors are in the mood to exchange dollars for Bitcoin or dollar or Bitcoin for dollars. And we've got a couple of zones right here that we need to pay attention to. You've got this area down here, which is a significant point, but you've also got this massive area right here, which is the psychological ranges. Logic says that if we are in the mood to see people buying Bitcoin, USDT dominance is going to shift back down to 3.93%. Another thing about dollar dominance is, of course, going over into the bonds and the yields. As it stands right now, the yields are coming in at 0.6%. That's why the NASDAQ itself is coming down. Now, that's the 2-year yield. If the 10-year yield is also coming into play at 4.5%. Now listen, if you start seeing the yields shooting up during the FOMC, we've got a problem. So go and get yourself the ticker symbol US10Y and go and have a look at that. And that's going to tell you if the stock market likes what they're hearing or not. If the yields start to shoot up, that's going to be a problem for the tech market. That's going to be a problem for Bitcoin. But I will say this. If FOMC marks everything down, and then Tesla, Microsoft, and Meta come out and say that they've done really well with their earnings estimates, logic says everything's going to shoot back up. So surely they'll use FOMC to bring it down to move it back up. Remember, when they cut interest rates or they say they're going to hold it, we're not going to see the true impact of that straight away. But the only impactful thing that's going to happen after FOMC is, of course, the earnings results from Meta and from Tesla and Microsoft. Okay? Nice to see you, Highline. Where we at? Okay, then. Oh, we got some gifts right here. Mad love and respect for my guy giving the gifts. Thank you very much. 688 likes. What is going on? Please, can you explain about Euro before the FOMC? Okay, then. Right. Let me just put it into perspective for you. Okay? Euro. You'll see Euro move quite aggressively in this FOMC. Okay? Now, one thing you do need to take into consideration with regards to the Euro is this. The Euro's currency is going to be lower. Why? Because the interest rates are going to be lower, which means that the yield on the Euro is not going to be as lucrative as it is with the dollar. So what are investors going to do? They're going to get their yen, pick up yen, convert that bad boy into dollars because the yield on the dollar is higher, put those dollars to work. Now, that can also mean going into the bonds. That can also mean retaining cash because you're picking up 7.8% appreciation on the dollar. You've got purchasing power now with the dollar. That's great news. It's not like last time when the dollar itself was not exactly that valuable when we had the carry trade unwind because the dollar was at 1 for 1. In other words, it was literally just a dollar. You weren't getting no appreciation. It was smack bang at 100. Okay? Cigarette cheap states, you get poor. Yeah. Okay, then never mind. US 10 to 14% in time. US 10-year to 14%. Are you mad? Do you understand what that means if it goes to 14%? Let's just go on that logic just for a split second, and then we'll go over to Bitcoin and have a look. Gentleman in the comments section has said that the US 10-year could go to 14%. Do you know what 14% looks like? Let's zoom out. Hold on. Let's go to the monthly chart. It's not anywhere we haven't been. That's the joke. You know? When was that? That was in 81. What was that? Well, that was just shortly after the bond crisis, the bond massacre, when the Federal Reserve came out and said, yeah, you know what we're going to do? We're going to decrease the interest rates. And they turned around and said, nah, man, we're going to increase the interest rates. That sent the bonds absolutely crazy. Okay. So same way it came up, aggressively came back down. And also market scares, recessions and what have you. That was a crazy time in the marketplace. Up the 5th of Feb is as in the past. Okay, never mind. Tino, have you heard about Velo? Apparently XRP of Asia backed the light. No, I haven't. Here we go. Got a question here. And what time are we on? Right, 10 more minutes before FOMC statement, then we can get into something more interesting. Okay then. Right, 2,573 people and we have 789 likes. That is dead. Please, ladies and gentlemen, like the stream. We want 2K likes. It's cheap enough to do. Tino, do you think the S&P will attack the DeepSeek USD JPY carry trade gap from the beginning of the week? Thank you for everything, mad love and respect. I think it's going to attack the gap? Okay then. The gap that this gentleman is referring to is this one over here. So go to the 4-hour time frame, go to the S&P, because the S&P and the NASDAQ both have this gap. Now, they've already tapped that gap in this range right here, but they've got this red vector candle region. I actually believe that the S&P is going to go for another all-time high, and so will the NASDAQ, okay? Because the only thing that is running right now for the NASDAQ and the S&P is earnings, and we've got the earnings this evening. Now, NASDAQ and S&P have come back down towards these vector candle points right here. You've got another vector candle region right here, which the stock market can absolutely slump and then make the reversal back up. Going into the calendar, you can see that we've got unemployment claims coming out. We've got the advanced GDP for the US dollar and, of course, the ECB press conference. They, too, are going to be cutting the interest rates on the euro itself. So that naturally means that dollar's going to go up, euro is going to go down, okay? But again, Powell is going to say we're looking for data. I'm flipping sick and tired of that story with regards to Powell and data. Now, any other questions? Now, brother, happy days. I'm trading without candles. It's so fun to use the trading system. Scalping ETH, brother. Mad love and respect. Here we go. 8 billion options in Bitcoin expire on Friday. Max pain is 98K. Bitcoin can't truly rally till Friday. Possibly. It can't. Yeah. Listen, you're going to get that where options markets will actually limit Bitcoin from making a move. However, if Bitcoin's going to move, all it takes is power to say something that the market will have an expectation of in the future to be beneficial. They're going to price it in now. Look at the carry trade. The carry trade unwind happened over the weekend. Bang! Everything dropped. Everything came back up. Okay? So it's really important that you get with that and the idea that the market's going to price it in now because they ain't got time to wait. They haven't got time to wait. They're not going to wait for an event to occur. They'll either let the event occur at that moment in time or price in the idea of what that event looks like. That's how the market operates, ladies and gentlemen. Any other questions? Hey, bro, W and M formation. Which time frame is suitable? Because the morning trade you did seem like a scalp trade. Yeah, the trade that I did this morning, the one that the gentleman is making reference to, is this one right here on NASDAQ. On NASDAQ, sorry, this was last night, but the one that I did this morning was right here. And it was from here. It wasn't necessarily an M formation. It was based off a V-shaped reversal, but it's an A-shaped reversal, but from the top side. Okay, so I saw the rise up and then the drop, and then I was waiting for them to come and clear out this range right here. Okay, and then I took the trade, the short, just beforehand on the break of that liquidity, and then it just rolled over. It would have rolled over even further into my favor, but never mind. I mean, look, man, that is just look at that. That's what you call a quick scalp, and that looks like death. That is disgusting. Look at how far it went down. That move itself, we cleared 6.5 grand on that move. 6,002. Where was it? No. It was, I was in the live stream this morning. Yeah, £6,200 on that move to the downside, right? If I held on to that trade, shoulda, woulda, coulda, probably be about a 30, 40 grand move, because I used around 89 lot sizes, 2 positions. It would have been a nice move. That was just 6K. All right, double that. There's another 12. Again, another 18. 24, and then never mind, whatever. But that's the logic I took. I took it on that V-shaped flip up here, and then it rolled over. Happy days. You keep seeing it happening on NASDAQ. You can see right there, made the move up to make the move down. Okay, but an example would be that right there. This trade right here, ladies and gentlemen, netted me 35 grand. All right, I spoke about it this morning, but the logic of this move down for the reversal netted me 35K. All right, and the way you do it is all the V-shaped reversals. You want to learn that V-shaped story, that's where you go into the members section, Platinum Trade Setup members. So the members section right here on the website, Platinum membership, where you get access to this PDF library. And all I talk about, the criteria is right in there, V-shaped reversals. And I use NASDAQ as the example. I've got examples right there. Look at this. This exactly, if you zoom in, you might be able to see it. All right, look at that. That's exactly what I traded. And that is an old screenshot from back in the day. Okay. That principle right there is what netted me the return on NASDAQ, okay? And then to put it into perspective for anyone new watching it, that was the trades live right there. There's your 35K, and then there was your initial starting balance of 6K right there. And we took our entries right here, okay? Happy days. Trading textbook V-shaped reversals on the NASDAQ, and it works a treat every single time. You'll get access to that if you become a platinum member right there, but you also get 5 trade setups per week, lots of other bits of information. But what I'm doing this weekend, because I do a weekly market wrap up where I review trades and the setups that have been put out in the week. I'm going to be talking about NASDAQ, the trade that I took on NASDAQ, to help the guys understand the logic of why I took the trade, what macroeconomically speaking was going on. It was the carry trade principle, what was going on with vectors and what have you. So that's what I'm going to be doing on the weekend. You get that once a week as well. Okay, so if you're interested in that, guys, get yourself over to tradersreality.com, and that information is in the description of the live stream. Okay, happy days. Any questions, guys? Everything is pumping. It's not really pumping up just yet, but we've got the FOMC coming in 3 minutes, guys. The statement's coming out. So we're going to be quickly having a look at that. So if you are new to the channel, guys, listen. What I'm going to be doing is we're going to have the FOMC statement come out in the next 3 minutes. The federal funds rate will be released, and it'll be a change in Forex. That means investors are now going to be understanding where can they get a differential on the rate. All right? That means what can they borrow from now, and over a period of time, what can they convert it to and earn the spread, okay? Best thing for you to do is to go over to the CME rate swap monitor. And that's going to tell you what are investors' expectations of certain assets like the euro, the yen, the dollar, and if they're going to make any money off holding euros or holding dollars. Right now, with the dollar being so high and the interest rate now being held, that means you can earn a higher yield for a longer period of time. So the logic says that you get rid of your euros, go into dollars. Okay, so that's one thing you've got to take into consideration. So what we're going to be doing, guys, we're going to be paying attention to this chart right here. This is the order flow in Bitcoin. So we will put that right there. Just move it across ever so slightly. I am paying close attention to orders right here on the book of Bitcoin. Let's move this across right here. This is just for the statement right now. And we've got Bitcoin's price in the middle. The logic says that we would want to see Bitcoin go to that red vector candle by the principle of the hybrid system. And if you haven't done so already, on the Traders Reality website, there is a free course. Go and check it out. It's all about the hybrid system. It will serve you 100%. And you'll understand the hybrid system, okay? So make sure you go and check that out. It's free to do, and you'll learn more about the hybrid system in response to the vector candles, market makers, and all that fun and games. Now, any other questions? Tino, what products do you use on your hair? Man, come on, brother. What the hell, man? Why is my hair any important than FOMC? It's just a bit of wax, bruv. Never mind. Bitcoin dominance is going well. Put Powell on screen, man. Powell is not speaking yet. It's 7:30. We've got another half an hour where I'll start taking some of your coins. Any interest in certain questions you want me to ask? Anything. Cough count for today. Well, today's cough count, in my opinion, ladies and gentlemen, is he's going to start the live stream with a good old... That's how it starts. If it starts like that, he's going to be dovish. If he doesn't cough, he's going to be hawkish. That's where I'm at with it all. Here we go. All right, then. It's now... Here we go. Here it is. 7 o'clock. 7 o'clock. FOMC is out. Let's just quickly have a look at NASDAQ. Look at NASDAQ there. Look at this yellow tab right here. That is moving pretty fast. Oh, it's down. NASDAQ don't like that. No cut. No. Yeah, but we knew this. No change. No change. That's fine. 4.5. This was expected. This was expected, guys. We knew this. Okay. What is the statement saying? Free Tino. I'm not in prison, man. Okay, so Bitcoin's doing very well, but listen, this is just a small reaction. It's nothing crazy, all right? NASDAQ is just moving. This is a tick chart, a 1 minute time frame. So let NASDAQ do what it needs to do, all right? They will bid it down to bring it back up, all right? So they already know this information, so it's nothing to be concerned about. Going into Bitcoin right now, just to put it into perspective for you, we have got nothing of interest right now in terms of the orders. We've got some activity coming into play, but I can see the bid 128 down below at 102,404. Yeah, look, they're bidding up. Look. Bidding up. That's good news for us. They're bidding up. That's good. Let's see if they can retain that. When you see the red going up as price is going up, it means they're bidding higher. So they're happy to buy as it's rising. Who does that? All right, then, where we at? Okay. Any other questions? Tino, I just registered on BTCC with your link. What other assets can I trade other than crypto? Can I trade the SP500 if I trade gold? Let's say what chart on TradingView? That's correct. So BTCC does have, for anyone that doesn't know, BTCC right here is our preferred exchange. Anyone in the US can use it. You don't need a VPN or anything like that. But you actually do get the option to trade NASDAQ, the S&P, gold, Forex, so EURUSD, Aussie USD, GBP USD, dollar yen. You can trade stocks, so you can trade Mara, you can trade MicroStrategy, you can trade Nvidia, you can trade crypto. But the benefit of using that platform is your ability to hedge. So if you're in a position in Bitcoin and it's going sideways, actually, it's great for anyone that trades XRP. Because if you're in a position in XRP and it ain't going anywhere, but you can see NASDAQ making a move, you can just jump over to NASDAQ, take the trade on NASDAQ, which is the ticker symbol TEC100, USDT, and you can exploit the movement on NASDAQ. You can buy stock. So right now we've got earnings call from MicroStrategy. You can, Microsoft. You can trade Microsoft's earnings, and you can buy positions right now in preparation for the earnings call. So if you dive into it all and think that MicroStrategy is going to be, Microsoft is going to be doing good, then you get involved in that and place your orders with the anticipation of the earnings call later on this evening. But anyone in the States gets the benefit of no VPN required or KYC required with BTCC. That's in the description of this live stream. So go check that bad boy out. Okay. All right, then let's get into it. Bitcoin's pulling back down right now. You're betting on hawkish. Okay, then. Is Tino AI? No, I'm not AI. Yo, Tino, please, could you provide us with some rap music in 2025? I got you. Tino, bruv. Okay. Tino, why don't you use Bookmap anymore? It's not I don't use it. It's just I'm using other things. You know, I'm looking at depth of market mainly. And I can see the order flow on other platforms like ExoCharts. I can see... When you are trading on the depth of market... and you're using the depth of market, you tend to just have this intuitive way of looking at where the orders are. You can see the order flow. Bookmap is just one way of putting the order flow. And then you've got Exo charts. You've got Atos Platform. You've got Quant Tower. They're all using the same thing. It's just different prices. One's free, the other's not. Okay. So for me, I use the depth of market and of course hybrid system. From the beginning, it's hybrid system for me. You know, that's where my head's at. I will always use the hybrid system first and then determine order flow if I'm scalping NASDAQ and S&P futures on the 30-second time frame and the depth of market itself. Okay. Yeah, this is on this. Yeah, this is the depth of market. Yeah, I'll keep that up on the FOMC. I will be keeping that up. And you can see NASDAQ tab right there. Let's just quickly go and have a look at Nvidia. What's Nvidia doing? I'll leave that. There we go. Let's put that there. That's for Bitcoin right there, guys. So just keep an eye out on that. I think Nvidia itself. Let me just move over to Nvidia right now. Nvidia's down still 6%, so it's not really that bad. I'm all right with that. So NASDAQ's done a nice little snap reversal. So what I mean, this is why you don't trade these times, man. I could take trades off this easily right now, but I'm running the risk of getting shaken out. I really am. Like, it's just absolutely crazy what it's doing. You know, just for giggles, we'll have a little stab right now. What have we got? Let's have a look. Let's have a look. I'm not going in at 89 contracts. I'm going to go at 50. Here we go. Let's have a look. What we got? NASDAQ, you're going to try and go down. Probably try and sweep the liquidity lower. Lots of tick volume right there. I've got some imbalances down below that they could go and gun for. It's not really looking favorable for me just yet. I could take a little bit of a long, but I'm not trusting it with the NASDAQ. It seems to be coming up to come back down again. I might take a very, 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 very quick scalp. I might have a bit of spread on there. Let's see if we can do it. A little quick scalp right there. Let's see. Try and make a little bit of change. That's right. Here we go. I'm not going to be making much or losing much. Here we go. So down 600, down 400. Let's see if they can actually try and clear the range higher. Maybe not. Try and hold it. Snap up. There she goes. Can we do it? A little bit of a pump. Give me the pump. Pump it up. Go. 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 3, 2, 1. There you go. I'll take $500. No, £400. £487. Happy days. There we go. Good day's work. Happy days. There's your quick scalp, ladies and gentlemen. That's what we do. All right. Very, very quick. Very, very fast. Got to be very quick. I was using a bit of size there, but that example right there is just how we do it. Just a quick scalp. Done. That's a live account, by the way. Like, there's no BS about it. Yeah, this is straight up live account, personal funds, all done. Started with £6,000. Now we're at 48.98. £48,968. All right. So you see that though. Look. That very small entry, £500, finished. That's why you don't. All right, the difference is I'm using 500 to 1 leverage. Okay, I'm also using a bigger balance. I've got the flexibility to use bigger lot sizes and stay in the trade for less time, which means that's my goal. I want to use the most amount of money for the shortest amount of time to make the most amount of money. That's my logic. Okay. And if I can achieve that, happy days, man. We'll sit around waiting for big price movements. Why would you look for that? You know? Now, Bitcoin, not really doing much. NASDAQ, holding out. And this is what I do when I trade the NASDAQ, ladies and gentlemen. All right, I'm looking for these sort of things. And there is an ExoCharts course on the website, which, to be honest with you, serves and pays for itself. It tells you exactly how I'm trading on ExoCharts, using ExoCharts. There's 5 hours worth of trading videos on there. And the majority of it is setting up. And then I go into the context of how to trade using ExoCharts. All right. And if you're a platinum member, you can then effectively join the Discord, where I'm always changing the actual templates for certain assets. And we share those out when I get the chance to share them, if I do update them. But I should have stayed in that long. Could have made a little bit more change. But that's because I'm in live with you guys and I don't want to just focus on that. I want to be spending my time with you guys as well. Okay. But yeah, ExoCharts course on the Traders Reality website, which you get 20% off on the actual. As a platinum member, you get a discount of 20% off on that course. But it's beneficial for anyone that is going to use ExoCharts. Don't get involved in ExoCharts if you're not going to commit the time to understand what you can do with it. Okay? Don't make that mistake of just hoping for the best that you're gonna get involved in ExoCharts. Same way with Bookmap, same way with Quant Tower. Stick with something, and the first thing you got to stick with is the foundation of the system you're using, which is the hybrid. Then you incorporate ExoCharts to understand how you can add a confluence to it. Okay. This is just on IC markets. IC markets, everything you need for the exchanges we've got are in the description of the live stream for BTCC, MEXI, and IC markets and what have you. Tino, can you have them get rid of some of the alerts that aren't necessary in the hybrid system and add an alert for the first green vector candle above the 50 EMA? Thank you. Well, listen, the first green vector candle above the 50 EMA is something that you need to be monitoring. Straight up, you need to be monitoring that because it's a discretionary approach. It's a discretionary trading system. You're having to sit there and monitor and wait for it. All right, you'll get many green vectors above the 50 EMA on the 5-minute time frame, but which ones are going to be the valid ones? That's where you need to break it all down and put a criteria behind it. Where are you coming from in terms of the macro aspect? Have you had some bad news? Have you had some good news? Okay. Where am I at? Any other questions, guys? Tino, waiting for that drop. Take back the t-shirt. No. Tino, why are your ears so red? Are you bearish? Bro, are these your questions? Well, anyways, 10 minutes passed. Any questions, any coins that you want me to look at? I'm going to start diving into, don't blast the chat, guys, don't, because there are questions that I want to see, okay? Tina, most serious question, what moisturizer do you use and maintain that skin complexion? I dip my face in castor oil and smoke 50 cigarettes a day. How about that? Not bad for a skincare. Just drink water, man. That's all I do. And lots and lots and lots and lots and lots and lots of... Anyways. What a guy. All right, then. But XRP... Guys, I'm giving you free roam. And you're asking for XRP, this stupid asset. Tina, what do you think about... I don't know about grass token. No, I'm not going to go look into that. Tino, do your glasses... No, actually, my glasses are transcription glasses. They're AI glasses. If I look up, it's going to tell me what I should really be talking about. And I've got it programmed to do that. Yeah, I don't even know what the name of it is. But anyways. Okay, so we've got XRP right here, ladies and gentlemen. And we have got the FOMC starting very, very shortly. 2:30 p.m. 20 minutes until Powell's flavor, man. Where we at? 1,200 likes. We're getting there, gang. We are getting there. 2,000 likes is what we want for the live stream. Okay, then. So, you know what? I'm going to actually look at this, all right? I'm going to look at this fart coin because everyone's been trading it in the Discord. I just need to look at this fart coin story. Here we go. Some of the guys in the Discord have absolutely been ripping this coin. They have been violating this coin with the hybrid system unbelievably. Yep, I can see why. That trades wonderfully. Oh, wow. Unbelievable. What we got here? Bro, near protocol, stacks, and AVAX, please. I got you. Near. All right, what we got here? I'm only going to do this for the next few minutes, guys. Right, so near protocol, it's moving down. Listen, you'll find that every single altcoin, unless this altcoin is relevant to you, okay? You'll find that every single altcoin will be moving down. And, of course, alongside Bitcoin and Ethereum, we're done with altcoin season. I'm sorry, and even if it does happen, Bitcoin will be going up in the process. That's my opinion of it anyways. Ain't no one with a brain selling their Bitcoin at these prices with the trajectory of Bitcoin Strategic Reserve, with Utah, with Arizona, with all sorts of banks, sovereign wealth funds about to buy the Bitcoin, and they're going to get rid of it and go into, what, Chainlink? What, BNB? AVE? Luna? H-bar, can't knock H-bar, man. Hedra smashes it. It's always doing something, and it does great. Okay, so just take that into consideration. Now, near coin, here we go. Yeah, it's moving lower. I would say on the higher time frames, if you are a holder per se, look left. You got some vector candle recovery. Yes, you do. Down here, you got green vectors. I'd expect it to come back down towards the $3.80 mark with the prospect of you being able to bid on that one and get some spot positions on the idea that if it's good news for the FOMC, I'm not saying it's going to go down to there now, but I'm saying that in the future, it could come down to $3.50 to then try and make a reversal from that point. Just look, altcoins, guys. The trick to altcoins is this, okay? Look at where the altcoin itself has made a very big move to the downside, okay? That's where you're finding most of the big buys, in my opinion, okay? Where in the altcoin, psychologically, does it look aggressive, okay? So look at this chart right here, okay? So psychologically, where does it look aggressive? Well, we're about to take out this key. I actually got this area marked off on stacks. I remember looking at stacks from before. There you go. Back into the vectors, man. It's on its way to 70 cents maybe. And you've got a vector candle right there at the $1.62. Which tells me that if it does hit that point, it could potentially reverse from it. It's a psychological point, okay? So right there, you can see big movement, okay? So that could lead to a move or reversal from that point. So go check that out, my friend. And finally, AVAX. Here we go. AVAX itself is going over there. Okay, so AVAX. All right, you know what? The DeFi and all that stuff, like, you guys got to be mindful of it, man. If you guys are staking as well, you know, total value locked is starting to go up a little bit across DeFi. And when it starts to go up, that's good news. So that's where you start paying attention to BNB. Of course, all the other on-chain platforms where you can start staking. That's where, in my opinion, the truth of people buying coins and holding and changing. That's where the truth is in crypto, if I'm honest with you, in DeFi. That's the truth of it, you know. $23, yeah, I expect that. I expect $23. $23.44. Green vector candle recovery. It's not finding support in this point just yet, unless something great happens and it will shoot back up from that range. I think the support comes in at $24.55. Okay. Okay, then. What else have we got? Bitcoin dominance, please. Okay, let's have a look at Bitcoin dominance. Where you at? I said this before, guys. Bitcoin will come back to 61%. It will. It will come back to 61.75. I bet you it does. I bet you it rips up a brand new move to the upside, and it's just going to go. It will. Here we go. What if Bitcoin has his strategic reserve, but the Fed increases the interest rates in the next meeting? What if Bitcoin... Listen, Bitcoin strategic reserve is designed to be a hedge against inflation, okay? Fundamentally, Bitcoin shouldn't be doing anything when the interest rates go up or down. It's the fear of... It's how to hedge themselves, okay? So you might think that when interest rates go down, logic says that you should be buying Bitcoin, okay? But... even if the interest rates go up or down, Bitcoin shouldn't be moving as aggressively. But the problem you've got is you've got so much money tied into Bitcoin from Wall Street that they're going to be moving it up and down. And that's the issue we've got. The issue is Wall Street's going to dictate what Bitcoin does. And you've got to take that into consideration, ladies and gentlemen, when you are trading. Here we go. What we got going off here. Is that order been removed off Bitcoin? Where we at? Quarter past, ladies and gentlemen. Not too long. Not too long on the flavor of Bitcoin. Let's just bring up Exo charts for a second. Have a look at the order flow. Okay, then, so it's just come down. Back into value right now, Bitcoin is. It's come back down again, so that's good news. Okay, NASDAQ is rolling over. We've got previous days open down here at 21.32.7, so that might be a bit of a problem. The order flow itself of Bitcoin, look at that. It's opening at that point right there at 101.259. That could be a possibility for Bitcoin, ladies and gentlemen. Daily open is very close, but you've got a red vector candle right there. That is wonderful. If the market does what I think it's going to do, this red vector candle should get recovered. All right. And we will be here to witness if that's going to be the case. But Powell is going to be the problem if he doesn't say the right thing. That's going to be an issue for us. Okay. ONDO. What the hell is ONDO? Okay, then. Let's have a look at that. ONDO. Same story. Okay. However, with this coin, it's trading higher than it is actually lower than across the board. Right, this, you know what? Frankly, my friend, unless you are trading this on if you've got this on spot, I wouldn't trade this. I mean, it would be a very hard asset to trade, in my opinion, because of the actual how spiky it is, how choppy it is. There's nothing calm and collective about it. Compare that to NEAR, okay? You can see NEAR is so much more better as an asset. Look at it, it's clean. You got clean movement up and down. You got vector candles. It's just easier to trade. So whatever your view is on that, if it's a hold, if it's your bag, and you want to try and accumulate more, in my opinion, you've got to wait until FOMC is done. Do you know what, guys? My honest opinion right now, I'm going to say this to you all before we actually get into the preparation of FOMC. The best way, in my opinion, for you guys to play the altcoins, all right? This is an assumption here. But wait until you know where we are with interest rates. It's simple. Because that's going to be more money going into crypto. And I actually believe that we're sort of morphing away from the idea of the Bitcoin season, altcoin season. Because if Bitcoin goes up, everything's going up. Bitcoin's going down, everything's going down. Bitcoin going down, fundamentally, with the Bitcoin dominance going down as well, you expect altcoins to go up. But no one is selling their Bitcoin now. Sorry. You've got a supply shock issue coming into play. They ain't selling their Bitcoin for an altcoin. Sorry, ain't happening. Sorry, I will not accept that. What's this? Tino, take a look at UFID for me, bro. Yes, meme. Okay. It's a choppy coin, my bro. I wouldn't recommend trading this. It's an absolute nut job. If you're holding it for the future and what have you, I mean, it's going to go back down to 0.7. Yeah, it's going to eat that liquidity down there. Yep, more than likely. It's just a rug pull, in my opinion. Sorry. Swift coin. Here we go. Swift coin USDT. Yeah, okay. Swift coin. Nice. Oh, it's just woken up. Not bad. Quite a choppy asset. Obviously a news play recently. Probably going to come back up into that 0.0241. But with the market right now, it's probably going to come down to the psychological ranges. I'd be looking for bids down here at 0.015, to be honest with you. Okay. Any other questions right now? Tino, can you look at Tino? Okay, what about the utility like Tau? Okay, my man, let's have a look at Tau. And then we're going to get into FOMC, guys, so make sure you stick around for that. All right. I mean, look, man, this coin is it's not messing about. This is an altcoin. Proper, you know, in the sense of how much it costs and the actual liquidity behind it. I will play that. I would entertain that, okay? Quite choppy, but it's prone to a lot of news and any madness. But when you've got an altcoin that is priced so much, okay, look at it. It's up there with BNB as such, right? From a structural point of view, it's rolling over, in my opinion. I'm waiting for altcoins to come back into vectors. That's all I'm looking for. And to put that into perspective, you go over to the totals chart. Look at the totals market cap for altcoins. Okay, this removes Bitcoin and Ethereum. And look at what we're going into. I'm expecting altcoins to take a shoe bag to the downside. Some of you might not like the idea of that, but that is one zone right there. I'm expecting the altcoin chart itself, dominance, the total market cap, to roll over. We're going to lose about $100 billion in altcoins, which should then send altcoins down, and that will be an opportunity for you to buy them again if you really do want to buy them. And just buy Bitcoin. And if I'm honest with you, ladies and gentlemen, you're going to put all your money into altcoins. I'm not trying to put you off altcoins. I'm just trying to, hopefully, if you can improve the odds of you making money on certain altcoins, then you're going to have to start looking at altcoins in the same sense that you would with stocks, okay? And that means if there is a good news announcements coming out, or there is a pending change in the altcoin that could significantly improve the chance of it going higher, then you get involved in that. So that means you might have to go out and look for due diligence on the coin. What's going on? I guess with altcoins, you really got to be in it for the tech. You really do. Because look what's going on with XRP, all right? If XRP is making such significant moves because of the new stablecoin being issued, and of course it's going to be the central bank's ideal currency, crypto coin that's going to be initiating payments and what have you, fine, there's your utility, okay? Then you go over to other altcoins like Binance, BNB, there's the smart chain, what's the utility over there? Even though Binance is now being done for fraud and money laundering, so there's going to be a bit of problem over there, and that's with CZ out of it as well. That's unbelievable, man. Never mind. But yeah, you need to start looking at it from that perspective. Eco, what can we expect? What do we expect? ICP, one more. That's it, yeah. ICP, please, Tino. We've got a question here. What can we expect from Powell to say, expect the market to pump? Look, man, listen. I'm going to say it to you clearly, okay? If Powell is hawkish, the markets will go down. If Powell is dovish, the markets will go up. If he gives us any idea that the market's going to receive future rate cuts and he doesn't start blaming Trump, he's got data to fall back on and he's got Trump to fall back on. If he's not clear about his projection of cutting rates going into 2025 and they're holding, you know what the next best thing to holding is? It's increasing. They did exactly that back in the 70s. That's what caused the bond massacre. Do you understand? They increase it again. Only by a quarter basis point, imagine. They think, yeah, let's just increase it just a little bit more. Okay? Because right now, if we just look at it, hold on a sec. Yeah, ICP. Yep. I'd say this is going to hit $8, my man. If the market reverses, it's going to be $8. It could be even lower than that because you've got liquidity down here. Interesting point. $7.76. That's my next logical spot for it. Bids would be down here, my friend. Down there. $7.01. $7 spot one. But, I mean, again, if it's not Bitcoin, it's a meme coin. Sorry. But utility, I know ICP holds well. Okay. And Fetch AI. When we received the news about DeepSeek, okay, Fetch AI took a smack. Look. Where is it? Fetch AI. That's just destroyed, annihilated, completely battered. It's got ripped to the downside. Managing 96 cents, but I'd be expecting Fetch to roll over to 71. That's what my expectation would be. Okay? All right, and we're getting close to it all now, ladies and gentlemen. Let's do a little bit of housekeeping. Where we at? 3,527 of you. Right, I'm changing the goalpost, ladies and gentlemen. 3,000 likes and I will love you. How about that? 3,000 likes. And for anybody new to the live stream, again, make your way over to tradersreality.com where you can learn the hybrid system. You can become a member. You can be a platinum member where you get access to fun and games like these checklists on all of the hybrid system. What you got to do is search for the PDF library in the website search bar and you'll get access to this as a platinum member. We will learn the block trade principle. These are all printed out by myself, hand typed. Ain't no chat GPT in this because you can tell with my verbiage in there. I do speak to you like as if I'm speaking to you face to face, but everything is in there about breaking down the macros, how to utilize the data that is being released by the Federal Reserve, going into scaling in, how to add to trades. Also, V-shaped reversals. One of the, again, for anybody new, the V-shaped principles inside of this netted me 35K last night. Last night. So that right there is just everything you need is in that V-shaped reversals checklist. And then, of course, vector candles and then the platinum trade setups checklist. So at the start of every single day with the platinum members, they get a checklist. Sorry, they get setups. This checklist right here is going to be at your side where you're going to be referring to it as each setup comes out. Okay, cool. That's on tradersreality.com. And of course, trading with BTCC is our preferred exchange. That's in the description of the live stream. Okay. Go check that out, ladies and gentlemen. Let's get this live stream sorted out. Let's hear what Powell has to say. He's going to be coming on in the next 5 minutes. So let's get our bearings all together. We're going to be looking at Bitcoin on the 1 hour time frame. We're going to have the order flow set up on there. Okay, then. I think we're going to do that now. Tino, what do you think about Bitcoin monthly candle? Where is it good to close? See, you know what? Let me just put this right here. The monthly candle finishes, of course, in a couple of days' time. And there's two things that's going to happen. Regardless of where this closes, all right? The wick itself is so important because it's money in there. Look what they did here. They recovered that wick. They've recovered this wick. They're going to recover that wick. They really are. Might be a little bit of a challenge, but they're recovering this wick. So in a couple of days' time, you could see Bitcoin recovering this wick unless it does it in this candle. So that means the start of a new candle will come into play. Bitcoin would fundamentally keep going up because it's not stopping, guys. This is a big push to the upside. But that's, of course, of a 1, 2, 3, 4, 5, 6, 7, 8 month consolidation, man. What the hell? It's like Bitcoin paused. All right, and let's get with the program, guys. We're going to be listening to FOMC very, very shortly. If you are new to the channel, be sure to like and subscribe. It costs you nothing. Likes. Tino, did you finally get Jenna's number? I didn't, bro. Jenna? No. No way. Tino, I'm in longs right now. Any advice for me? Put my hand on my heart for you, my bro. I really do. Good luck. That's all I'm saying to you. You're in longs right now. You're in longs right now. The hell, man. Be careful. That's all I'm saying. Scale back your position. Do not put any more size. Do not average down. Don't let these times make you FOMO in. All right? Don't do it. Wait until the data comes out. Then you'll know where we're going to be. And then in the at the close of the market, Microsoft, Meta, and Tesla are going to be declaring their earnings. So now you can sit back and be like, you know what? I'm going to be trading Asia tonight because in Asia, you'll have all the information about today. What have you got now? You've got speculation, my friend. It's a guessing game. improve the odds of a trade working in your favor when you know exactly what reasons investors will have to buy or sell. You'll know that in the next 30 minutes. And then when the market closes, if Microsoft and Tesla and Meta do well. Okay? All right then. Powell has started. I don't think he has started. We're going to be popping on the headphonies. Let's get this party started, ladies and gentlemen. All right then. Come on. I wouldn't say it started just yet, guys. Let's have a look on YouTube. Yes, I'm fully aware of that. Continue. All right then, here we go. Here we go. So, Bitcoin on the right. This is where the price is going to be. Right, that's Bitcoin right there, ladies and gentlemen. Here we go. No, 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 no. Don't do that yet, Tino. Don't do that yet. Should be able to hear that bad boy. We'll be paying attention to this thing over here. This is Nvidia. This is Bitcoin right here, guys. Okay. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Here we go. You
Steve
stupid
Leisman from
cops.
CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates
Here we go.
drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
3 questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said.
Oh, man.
It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have,
Nice.
focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated his demand to you?
I've had no contact.
Thank you.
Thanks.
That was awkward.
Nick Timmeros, The Wall Street Journal.
This is
Chair
interesting.
Powell,
Here we
you
go.
and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we literally look at movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
Come on, Bitcoin.
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings and you see we don't overreact to two good readings or two bad readings, but nonetheless the last couple of readings have suggested more positive readings. So I think policy is well
Computer can't keep up.
positioned.
Colby from the New York Times.
Computer can't keep up with it.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No, so
Got QXO charts.
if you just look
Computer
at the
can't
first
keep up with it.
paragraph,
Wow.
we did a little bit of language cleanup there. We took out
Thank you,
a
Bitcoin.
reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence.
Hold
Again,
on.
I mean, if you look at the
Hold
sort of
on.
intermeeting data, it was good.
Bitcoin,
and
slow
then
down.
There was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal
shut up.
sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer run, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much, and I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations. And and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those 4 areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking, it's more the way it works is we are looking at the data to guide us in what we should do. And,
You'll never
that's what
give.
we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth.
You just dismissed him.
Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
Getting political now.
As I've said countless times over the years, this is who we are, this is what we do. We study the data, we analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
Bro, it's not.
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see they're alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones.
Powell's
And
trying
what
to be
those
president,
do
man.
Is they spark the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. No one saw the pandemic coming, and it changed everything.
How you're boring now,
so
man.
things
Come
happen,
on.
and but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case, but you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News. Last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd
Nice.
say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, then we seem to be set up for further progress. But being seemed to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there
This is
broad
important.
agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate.
We need low
workers reporting that
weaknesses
it's
in
increasingly
the labor
difficult
market
find
to
a
justify
job.
rate
Is that
cuts.
of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. And so it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all
Job
those
openings
things.
and all that.
You put your finger, though, on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
Great question.
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So if those two things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Don't mention Elon at FOMC, man.
Chris Rugaber at Associated Press. President Trump has said he will lower
Here we
inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Great question.
Chris, I'm not going to react or discuss anything that any elected politician might say, so I'll give you a mulligan.
Okay.
Oh, wow. What a
nearly 2
guy.
weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Straight up.
Well,
nice.
2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course. As I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria. Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to.
He's got to be careful what he says.
I'm not going to go any deeper than that, or get into any deeper into this set of issues today.
This guy's scared of Trump. He wants his job.
Claire Jones from the Financial Times. 2 questions, if I may, on tariffs.
Come on, Claire, what you got for us?
First of all, we've seen global trade wars before, notably
Trade
in
wars.
2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations?
The US isn't
before you're
tariffing
actually willing
itself.
to change
That's
the
why
path of
Canada
military
cut.
policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018. We didn't really know. And, again, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
I love it when he finishes a question. He's like,
Courtney
stands there
Brown,
awkward.
from Axios. 2 unrelated questions. The first is whether or
unrelated?
not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
Nice.
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Do you just slate the AI markets?
Simon Rabinovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized.
Not getting anything.
Since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point, back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
He's abrupt with his questions on the end, man.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt Egan.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
What a question, man.
We look from a financial stability perspective at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But you know, we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is if there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at.
That's
I
obvious.
think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs, and really it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy, is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see, there's nothing in the data yet on that, but you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet, but yes, you hear it anecdotally.
Nick. Going to be coming to an end.
Thank you, Chair Powell. Nicholas Jasinski from Barron's.
Barron's.
Uncertainty is certainly a theme today, and I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I don't think, I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Heaven.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid. Downside risks to the labor market appear to have abated. And we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts.
You know, it's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And you know, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, you know, continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? If we expect to see that, it's just a question of when.
Wow.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little
nice
about
questions
why?
now.
Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, you know, we said what we said was that at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And you know, our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
This has been so boring, honestly.
Hello, Chairman Powell. Mark Hamrick with Bankrate.
As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency.
Here we go.
Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
Shut up.
You know, so our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's, you know, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks that we regulate and supervise do that. You know, the threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new, and you know, we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, you know, we're not against innovation, and we certainly don't want to take actions that would cause banks to, you know, to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in that,
Go away, you're negative.
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have, you know, the securities laws that we have. It's why, you know, if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And you know, I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, you know, with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do.
Cheers.
Thank you.
He was packing up before they even finished the question. Jerome Powell. I think the guy is brilliant, man. Honestly, he's very abrupt, diverting all those questions about the tariffs and what have you. I mean, come on, man. It's been a pretty boring FOMC, but we're seeing some movement across the board. I mean, NASDAQ was making a move. I'm currently taking longs on the NASDAQ over here, trying to exploit that little flavoursome move up right there, just in a couple of grand's worth of profit. Was around 7,000, but we actually just held on to it a little bit, took some more trades, closed a couple, lost a bit. But I'm just now waiting to see NASDAQ try and make the pump up, because we are now going into the idea of Meta and Microsoft. I keep saying MicroStrategy. So I'm going to see how this trade plays out. If it goes to my entry, then I'm done. But never mind. It has been a very interesting story, to say the least, ladies and gentlemen. What a guy. What an absolute guy and a clown. That guy came with a negative question on Bitcoin, which ended up being a positive response for crypto. Now, with that being said, ladies and gentlemen, just to finalize it all, if you are new to the channel, welcome to Traders Reality. My name is Tino. Mad love and respect for being here. We got Bitcoin pumping up, heading towards the psychological regions. Remember, if you are new, get to Traders Reality website, and that's in the description of this live stream, where you can find out more about the hybrid system. And I think we now need to go off and do a little bit of trading, because we've got the Asian session to get involved to tonight, and I'm going to be doing an update for the Platinum members to get them aligned with what we can expect going into tonight. Ladies and gentlemen, it has been more than just a pleasure. Mad love and respect, and I'll be seeing you all tomorrow. Peace.